Shares of Google are dropping like a rock in the after hours after the company announced their Q4 earnings. As usual, we will go through them, but we've got some very critical information coming from Google. They expect to invest approximately $75 billion in capital expenditures, basically data centers over at Google. We'll talk about what company that benefits the most and why shares of that company are up in the after hours. Also, we'll compare that to last year's spending. How much more is $75 billion this year in spend? More than last year for Google, give you an indication of the type of semiconductor demand that this company might command along with the other giants in the same cloud computing space. We'll also look at this one technically. It literally just made a new higher high. We are pulling back. It is in a beautiful uptrend. No matter how you look at Google, it is in a gorgeous uptrend. It is hitting is approaching a 200-day moving average. It's in a shorter term, longer term, intermediate uptrend. So whenever a stock is in an uptrend and it starts to pull back, you probably know what you need to be doing. We'll point out some levels where you can step in and buy the dip on Google. What is going on, investors? Hopefully you guys are doing well out there. It was due for a dip because Google over the past year has seen its shares rise 43%. Even year to date, we're up 8%, but we're giving that back in the after hours. I'm seeing, depending on what chart and what data you're using, down about 8% in the after hours for Google. That is because revenue came in at $96.5 billion. You always got to rub your glasses a little bit, clean them off, make sure you are free of any narcotics. When you read numbers like this is just unbelievable type stuff. 11% growth year over year, but it missed expectations. Okay. And so when we saw Meta last week report earnings where they beat expectations, everything was good for Meta. So you got to assume online advertising is pretty good. Well, with Google, now I'm not saying this is, but it could show that there is some underlying cracks where AI is taking away some Google searches here. Okay, because with Meta's business, it's all social media. It's all the ads are pushed to you whether you want them or not. With Google, it's all intent based. I am searching something on Google and it serves me an ad. Well, if I'm doing less searches on Google, and I know just me personally, probably many of you out there watching this as well, you're probably searching a little bit less on Google and you're going to your ChatGPT, or me, I'm going to Grok and I'm using that a lot. You use whatever AI service that you're using. And so maybe less ad load. Because you missed expectations. $96.5 billion. Wall Street was expecting a number closer to $96.7 billion. The high end was 99. And so what does that do? When you miss the fourth quarter, because the fourth quarter is when every e-commerce site and everybody and their brother is advertising because it's the holiday shopping season. When you miss the fourth quarter, well, that's why the shares are down by about 8% in the after hours, because then you wonder, well, crap. Well, the first quarter must not be very good either. Wall Street expectations are for $89 billion. The low end's 87, the high end's 91. Kind of brings into question, maybe not the firmness of the growth, but it basically solidifies that Google probably for the next several quarters, unless they introduce something that really, increases the ad load, ad spend, probably a 10, 11% grower, which again, at $90 billion worth of revenue on a quarterly basis, 10% growth, as you'll see in a moment with these types of financials, is absolutely phenomenal. So we are nitpicking a little bit, but that's what you do. With these stocks that have just hit a new all-time high, you have to nitpick a little bit. They are over and above kind of a moving average or a longer-term trend, if you will. Now, everything else looks really good. Their operating margins ticked up to 32%, like every tech company in Silicon Valley. They are controlling their cost over at Google. Things look really good from that perspective. We have this $75 billion of capital expenditures in 2025. We now have numbers from Meta. We have numbers from Microsoft. I believe Meta, this is off the top of my head. Unfortunately, I don't have this number in front of me. I think they're in the 60 to 65 range, which was a dramatic acceleration over the previous year. Microsoft's going to spend about $80 billion. Google's going to spend $75 billion in 2025 on data centers. What did they spend last year? They spent $52 billion. Folks, that is a near 50% increase over the previous year. You'll also see this is an acceleration acceleration of spend just over the last quarter. In the most recent quarter, which we'll go over more in depth here in a moment, Google spent about $14.3 billion on purchases of property, plant, and equipment. You want to analyze this number out? You're getting to a number close to 60. So this number is going to go up. Reinforces what we believe over here at the Investor Channel is that the back half of the year is going to be very good as long as these estimates hold. Now, this is verbal commitment from Google, verbal commitment from Microsoft, but typically these types of verbal commitments have to turn into orders because NVIDIA has to scale up. If NVIDIA is scaling up, TSM has to scale up, ASML gets more orders, on and on down the line. And so these orders are probably as good as gold at this point. Things can change, but they're as good as gold. And that means the back half of the year for many semiconductor companies is probably going to be astronomical. The equipment makers are going to front run the demand. Their stocks are going to rise over the next several quarters. I'd probably take profits on those as they move up because my guess is we're going to see a plateauing of spending probably in 2025. Things look absolutely phenomenal for Google. And obviously this carries through to the semiconductor makers. Google is somewhat unique in that they use Broadcom to manufacture a lot of the custom silicon in their data centers. And after announcing earnings and that $75 billion number, Wall Street can connect the dots as best as anybody. And they immediately sent Broadcom shares up another 4%. And that's probably a little conservative based on the impact that Google's spending 50% more on data centers year over year is going to have on that business. Now, when we dive down into the details over at Google, YouTube looking pretty good. They ain't paying me nothing to post these videos, but somebody's making money over here on YouTube. Advertising business went from 65 up to 72 billion. Your service business, which includes some subscriptions as well. I noticed this flattened out in the year. This had slightly more dramatic growth rate in the previous periods as you rolled on some NFL subscriptions, YouTube TV, those types of things. 10.8 up to 11.6. That business in total, about $84 billion. One of the things that a lot of people look at is this Google Cloud business from $9.1 billion in revenue up to closer to $12 billion. Look at this, folks. Look at the profitability of this business. Something we've pointed out since the beginning when the business started to turn profitable. Now you're printing $2 billion worth of operating profit. Now, some of you might wonder, well, what, year over year, yeah, this is explosive. Google Cloud has just turned profitable. Well, I pulled up the numbers. I'm keeping them small here just so I don't mix them up. Trust me, I've recorded videos in the past and I've messed them up. So that's my little hack to not do that. Last quarter, Google Cloud on the revenue side had $11.4 billion. Now, this is important. Okay, guys. So quarter over quarter, you went from $11.4 billion in revenue up to about 11.9. So you're still seeing growth, but it's not that explosive growth. Okay. As we move into the rest of this year, Google Cloud is going to be lapping very high revenue and high profit numbers. They're still going to increase, but the exponential growth rate, those days are at least in the shorter term behind the company. Now, from an operating income perspective, like I said, year over year, you're like up huge revenue wise or operating income side. Notice though, that is also flattened out. Quarter over quarter, you did 1.947. So all intents and purposes, $2 billion. Here you did roughly $2.1 billion. So you're going to see a slowing of the operating income growth combined with a slowing of the revenue growth on that Google Cloud business. Again, very widely profitable. And some of you might, look at a $75 billion capital expenditure on data center. Well, just look for a single year, all things being equal, no growth. Company is going to do $40-50 billion in revenue just in Google Cloud. So of course they're going to spend $75 billion on that. In terms of operating income, they're going to print $8 to $10 billion. So that $75 billion in 1 year looks like a lot of money, but over the next several years, Google will monetize this $75 billion, and this is what the company hopes, and they'll make money on it towards the back half. It's very similar to like renting a house. People that buy houses and rent them, you might not make a lot of money year one, year two, but towards the back half of that and the refinance and those types of things, well, it can go up a lot. Now, one of the underestimating factors in Google is how great this balance sheet. Out of all of big tech, This is probably the greatest balance sheet that you'll see. $95 billion in cash. Now it's ticked down a little bit from the 110 we had as of December of last year, but still got a boatload of cash, $95 billion. It's balanced off by a little long-term debt. I wish I had a little long-term debt of $10.8 billion. For Google, it's a small amount compared to their cash balance sheet. Apple has this similar type of cash on their balance sheet, but Apple balances it off with almost an equal number of debt. Google has not done that. So this company is flush with cash. In a non-regulatory environment, they would have went out and bought every single company that they could have. They don't allow that. I don't expect the Trump administration to allow that. So it's still a mystery what Google is going to spend all of that cash on, considering when we look at operating cash flows, which we'll get to in a moment, company has plenty of that as well. Revenue's coming in 86 to 96. So we added $10 billion to that top side. Company continues, their cost of revenue obviously ticks up with revenue. Research and development went up by $1 billion, almost to the number year over year. So they're spending a little bit more there, but look at your sales and marketing. That went down. Your G&A went down. I tell you what, I've been to the Google campus 3 times in the last year, and it's like crickets there. Like there's nobody there. Whether you're there on a weekday or a weekend, there's like nobody there. They've gotten rid of everybody. And so they're really controlling costs. They continue to spend on R&D. Total costs went up by about $3 billion year over year, primarily due again to R&D and just kind of the general cost of delivery of those ads. Net income went all the way up to $26 billion. That's up over $20 billion. So you add 10 to the top line and about 6 of it, 6 billion flows to the bottom line. So as you continue to quarter after quarter, if you're growing at 10, 11% over at Google, you're going to go up another $8 to $10 billion every single quarter. That means all things else being equal, which we probably will assume with Google, you're going to continue to add about $6 billion to the bottom line year over year. It's just a very efficient business. Now, from a cash flow perspective, company pulls down a gigantic net income number and prints a massive amount of operating cash flow, $39 billion in a quarter. For the full year, last year, Google pulled down $125 billion, not of revenue. We're talking operating cash flow, which is just, it's hard to wrap your head around these types of numbers. So when you see the data center number of 75 billion, just understand all things being equal with Google, they'll print a number much larger than 125 billion. They'll probably get to a number closer to $150 billion. And so they are spending a good amount of that on property, plant, and equipment. We showed you they'll monetize that with Google Cloud. That continues to be a growing business, both revenue and profit-wise. So they'll spend some money there. What else does Google spend their money on? As you probably have realized, they're buying back the stock in the most recent quarter, $15.6 billion over the past year, $62 billion. Google just implemented a dividend for the first time in the company's history. I get it, but I don't know what it is off the top of my head. 80 cents per share, and probably sometime this year, it'll go up to $1, probably even higher than that. Company obviously can comfortably continue to grow this dividend. 2.4 in the most recent quarter, 7.4 billion in dividend payments over the last year. All things all in. So the company printed the $125 billion to operating cash flow. They spent 52 on the data center. They bought back stock. They paid dividend. They did some other stuff. All things up and down in terms of cash. It was roughly flat for the full year. That's what these large mature companies try to do. They try not to add a ton of cash to the balance sheet. In Google's case, they don't have to, but they also try not to subtract it. Obviously, with Google, you'd love to see, and this is kind of going off on a little bit of a tangent, you'd love to see them do something with this $95 billion. At some point, some type of acquisition, something that they're allowed to do here. Maybe in the autonomous driving space. I know they've got the estimate is maybe potentially, I think, a 70% stake. Maybe it's higher than that. It's all rumored into Waymo. maybe they're able to do something there because Waymo obviously seems like it is doing very, very well. So with Google, yeah, you have a dip in the shares in the after hours. It does kind of suck if you bought shares this morning, but most of you probably bought shares of this a long time ago. This blue line, it is a 200-day moving average. It coincides with the purple trend line that we've had intact. I don't typically have moving averages on my charts, but I had it on earlier today. I was looking at some other charts. It does help every once in a while, especially if you haven't looked at the chart or it's got a lot of craziness in it. The moving averages can help. You're pulling back with Google. The first area is, look, I wouldn't blame anyone for this stock selling off a nickel and somebody wanting to get in there and buy it just based on these financials and everything that they have going on it. Deeper pullbacks in the 170s, 180s, you're probably $10 off of that in the after hours. That's probably your starting point. Obviously, further back, if you, for some reason, get further pullbacks, coincide with the 200-day moving average. If it happens in the shorter term, you're looking at $150 stock. I mean, you are doing your thing if and when that happens, folks. That was Google's Q4. Hopefully you enjoyed today's video. Let me know what you're doing with Google stock down below. I'll see you again later this week. Good luck with your investments.